Defense stocks are starting to heat up, and right now we've got 4 companies all reporting earnings around the same time. You got BigBear.ai, Castellum CTM, LDOS, and Redwire, and this is one of those setups where the entire sector could move, not just one stock. So in this video, I'm breaking down what to watch, what could push these stocks higher, and what could actually go wrong. If you want more breakdowns like this on stocks like CTM, BigBear.ai, and others, please hit the subscribe and like button and comment below what it is you want to see in future upcoming videos. Before we even get into the companies, you need to understand something. When multiple companies in the same sector report earnings at the same time, which is something that we talked about in a previous video discussing space stocks, it creates a chain reaction because if one company shows strong demand, it validates the entire space. If multiple companies show growth, that's when momentum really starts to kick in. But on the flip side, if they do disappoint, the whole group can sell off together. So this is one of those moments where you don't just watch one ticker, you watch the entire sector. So let's get things started off, guys. I know we talked about Redwire, but that's not what we're going to be starting off today. We're going to start off with none other than one of the most hyped defense stocks in mainstream media right now, which is none other than BigBear.ai. This one is all about AI plus defense plus government contracts. And going into earnings, this is a high volatility stock. Now, here's what matters. Revenue growth, are they actually scaling? Contract momentum, you got to ask, are they still winning deals and getting contracts? And most importantly, progress towards profitability, because as you do know, quarter over quarter, people do view BigBear.ai as somewhat of a wild card, as if you don't know what to expect within the upcoming earnings, as if they are not consistent enough. And a lot of people do get pretty freaked out when the earnings reports come out for BigBear.ai, because the story is still being built for the company and they've got the AI narrative, but they need to do a much better job in proving that they can actually execute as a company. If they surprise, they can move things fast, but if they disappoint, it can drop just as fast. And we have seen that happen in the past with poor performance with their earnings reports. If you enjoy my content, please hit the like and subscribe button. And if you ever need help making better decisions with investing, simply take a look at the first link below to get access to my community and support yourself with like-minded investors and get access to the world's leading AI models, Claude, Gemini, OpenAI, and Grok. Get all of this software for $7 in my community, and my community is free. So the next company that I want to talk about, we've talked about many times on this channel, is none other than Castellum CTM. And this is where things really get interesting, because it's not your typical small cap company. It's not your typical micro cap stock. CTM is sitting around a $50 million run rate, but management is already talking about $150 million right now. And that's not normal growth for a micro cap stock. And we do talk more about this in a previous video, so please check out. Link to that video will be below. But growth like this for a micro cap stock, it's along the lines of being very transformative. And the key part going into earnings is it's not just about the numbers, it's about the narrative. And you need to ask yourself, are they showing progress toward acquisitions? Are they improving margins? And are they continuing to clean up their financials? Because they've already brought in a legit IR firm, improved transparency, and started positioning for bigger moves. And don't forget about this, guys. They've talked about a 6 to 12 month timeline for completing an accredited acquisition, and investment bankers are involved, and they've said no dilution is needed in order for them to be able to complete this accredited acquisition. So in regards to the earnings report for CTM, this is less about one quarter and more about confirming the direction of the company. If they reinforce the story, this is where sentiment can start shifting very fast. And a lot of people, they do feel like this stock is undervalued, the people that do follow Castellum CTM and do invest in it, because as we do know, we continue to improve quarter over quarter and year over year. But due to the fact with their PR issues and just overall not enough eyes on the stock and not enough institutional interest, that's the main problems that's causing this stock to remain down at a price that a lot of people don't feel it should be valued at. Now, next company that we're going to be talking about, let's go over to LDOS. Now, this company, it's a little bit different because it's a lot more established than the other two that I'm discussing. Compared to something like BigBear.ai or Castellum CTM, this one is much more stable. But that doesn't mean it can't move. What matters here is, do they continue to win? Are they winning contracts? Is their revenue going to be consistent? And what is the forward guidance going to look like? And they've already been landing major government contracts. So that's the first question I already answered. They've been getting defense deals, and they have large-scale projects underway. So for LDOS, this is more about, can they keep delivering the steady growth that they've been doing as of late? Because if they do, it reinforces the strength of the defense sector as a whole. And lastly, which we covered in the previous video as well with space stocks, is none other than Redwire. Now, it's a hybrid. It's in space and it's defense. So it's kind of one merged together. And this one has been gaining momentum just recently because it's not as established as LDOS or some of the other space stocks like Black Sky, Rocket Lab, Lunar, you name it. It's gaining momentum recently, but it's not as established and not as stable. So what actually matters going into earnings for this stock is same things as LDOS as well, just checking to see, are they still winning contracts? And also, another reason, real quick, going back before, backtracking just a little bit, just so you do know, they have been expanding internationally and growing their backlog. And that's part of the reason why they recently have been gaining momentum. So going back to where I was, the things that you need to be looking for in the earnings report is, can they convert that backlog into real revenue? Are margins improving? And are they moving towards profitability? Because they've got the opportunities, now it's all about the execution. It's to see if they can really deliver on what they said they can. Because if they do, this could be one of those stocks that are one of those under the radar winners that ends up becoming a long-term winner. Now, what you need to take away from all of this isn't just about earnings. This is about validation. Is defense spending translating into real growth? Are these companies actually executing? And which ones are separating from the rest? Because after these earnings, you're going to see the ones that end up being winners and which ones lag behind in price action. So if you do enjoy this video, please hit the like and subscribe button and comment below what it is you want to see in future upcoming videos, as I do appreciate all the support and want to make videos based on what you guys want to see. So with that being said, InvestQ out, stay safe, keep making good decisions with your portfolios, and I'll see you all in the next video.